Hello everyone, welcome to another video. Now, before going to my strategies, which I will share in my next video, few important points you should know before applying our strategies. So, I will share with you some points which you have to consider while following my strategies that I will share you in my next lectures. Number one, like I told you in my previous lectures, we will use volume spread analysis VSA, and the VSA volume spread analysis we use volumes and candlestick charts and use the interrelation between them, and then we read the tape of the market, and we then have a judgment whether market is bullish or bearish, on which side this big player smart money is positioning, and we then align our trading in the direction of smart money, in the direction of big players. And how we can do that? We have to read the volume data, tick volume. Now there are different brokers in the market like XNS, XM Broker, FVS Broker, OctaFX, XZtrader, Decoscopy, CMC Market, different brokers. Now all have their volume data, tick volume data. Now which broker will give you the best tick volume data? You have to use this broker, XZtrader. This broker will give you good trustable tick volume data. You have to open a demo account. You don't need to open a real account. You just need to open a demo account and install the MT4 MetaTrader 4 and log in that and use volume on that. Okay, or you can go to your mobile application MT4, search XZtrader demo, and you have some servers over there. You can open a demo account there, and you can have a demo account of XZtrader on your mobile where you will see their volume data. So you have to read volumes on XZtrader platform, okay, whether on mobile or demo account. You don't need to open a real account. Demo account, real tick volume is enough for you to read the market, and then after reading market you can trade on your own broker or funded account, whatever this is. So XZtrader is the broker which you have to use to read the tick volumes, okay, to do the volume spread analysis. Now on my strategies that I will share, which instrument you should use for trade. There are many currency pairs, many instruments. You don't need to trade everything. You just need to look these things: gold, XAUSD, XAGUSD, silver, crude oil, GBP USD, Euro USD, USD JPY, USD CAD, AUD USD, New Zealand USD, BTC USD. That's it. This is the your watch list. You never have to go to the cross pairs. I don't recommend that. Ignore USD CHF pair as well. You just have to trade these instruments. Just put these instruments in your watch list and just monitor them. Ignore everything rest. Okay, you just need to apply my study that I will tell you on these pairs and these instruments: gold, silver, crude oil, pound USD, Euro USD, USD JPY, USD CAD, AUD USD, New Zealand USD, and BTC USD. These are my instrument selection on which you can apply my trading strategies, which I will share you in my next lectures. Now question is, what is the best time to trade? I mean, our day is actually 24 hours. Now which hour is best time to trade? Listen, we don't trade every day. We trade on active sessions like Asian session. We trade when Asian session open, we trade 2 hours after opening. Okay, when Asian session open, we do 2 hours of trading session. When UK session open, we trade 2 hours. When US session open, we trade 4 hours. So when Asian session opens, time start. You have to trade. You have to look market for 2 hours. When UK session open, you have to look market for 2 hours after UK session. After US session, UK session opening. When US session opens, you have to look market for 4 hours. These are the timings we will do, and rest of the hours, these are almost 8 hours. So rest 8 hours, other hours we don't trade the market. We trade only these 8 hours of the in the market. When Asian session open, time start, you have to trade, you have to look market for 2 hours. When UK session open, time start, you have to look market for 2 hours. When US session open, time start, you have to look market for 4 hours. Okay, that's very important. Never trade out of this timings. That's very important, especially on my strategy. Now, there are different time frame on charts like 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, weekly, daily, monthly, yearly. Now, for VSA, volume spread analysis and strategies, which time frame is best for you? Now that depends on session. Okay. If you are trading in Asian session 2 hours, then you have to look charts on 1 minute and 5 minute. These two time frame are best for you. 1 minute time frame chart and 5 minute time frame chart is best for you. You have to do VSA analysis and strategies on 1 minute and 5 minute chart. If you are in a UK session, after UK session opening, you have to use 5 minute chart and 15-minute chart. That are your best time frame charts which you can apply VSA analysis and strategies. And in US session, you have to use 15-minute time frame charts, 30-minute time frame charts, and if there is big news, then you can use one hourly chart as well. Okay, so in Asian session we can use 1 minute time frame chart and 5 minute time frame chart. In UK session we have to use 5 minute time frame chart and 15-minute time frame chart. In US session we have to use 15-minute time frame chart, 30-minute time frame chart, sometimes one hourly as well. So these are the best time frame charts for you to look for the VSA analysis and the strategies. Okay. Now, trend is your friend. Never trade against trend. Look at the market, the previous history, how market is behaving. If it is going in the upward direction, you just look for the buying opportunities. If the flow is downside, you look for the selling opportunities. Always trade in the direction of trend. Never trade against trend. Okay, you have to do VS analysis, volume spread analysis, you have to do COT report, you have to do open interest analysis. All analysis should align with the trend. If these analysis, open interest, COT report or volume spread analysis giving you a signal against trend, then don't trade. Always favor the trend and trade with the trend. Never trade against the trend. Trend is your friend. That's very, 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 very important. Okay, that's why in my court reports and in my open interest lectures I told you that when they align with trend, trust them. Then when they go against trend, don't trust them. That's it. Now, which tools we will use in trading? We will use three tools, nothing else. First, volume spread analysis, VSA. That is the first tool we will use, in which we will study candlestick charts and volume interrelation. How the volume is behaving with candles and how we read the tape. We will discuss that. Second is open interest. We discussed it previously in my initial lectures. You can check that. And for that, I told you one or two books as well. You can read them. You can have a better judgment of open interest analysis. Third is the court report. I discussed it previously as well. Two books I recommended as well. You can read that 2 to 3 times. And I gave practical video as well on open interest and court report. So these three tools we will use in our trading to judge the market and to find the trading opportunities, whether buy and sell. And these three tools will help us to track the footprints of smart money, and then we will trade in that direction. When we will do volume spread analysis, open interest and court report, then we will have an understanding what the big fishes, the big players, the big banks, the big smart money, the professionals are doing in the market. Either they are bullish or bearish. And when we know that, then VSA, volume spread analysis, give us the entry point, and we will then track the footprints of smart money, and then we trade in that direction and we will get profits, as we are trading with the alignment. We are aligning our trading with the smart money and we are trading in that direction. So these three tools will help you to understand these footprints of smart money and to trade in that direction. Now risk management is the most important thing. If you are trading on broker account, you have to risk 1% risk per trade. Okay, if you have broker account, you have some investment in forex broker account, take 1% risk per trade. Never take 2 or 3% risk per trade. Take 1% risk per trade. On funded accounts, take 0.5% risk per trade. Never trade 1%, 2% risk per trade. Always take 0.5% risk per trade. And how you will calculate 1% risk per trade and 0.5% risk per trade? By using the position size calculator. Go to Google, go to YouTube, search that how you can take 1% risk per trade or 0.5% risk per trade using the position size calculator. You will get the answers. In position size calculator, the calculator will ask you which instrument you are trading, how much the stop loss, how much is your account size, and when you put all those entries and click the button for answer, then you will get the position size, the lot size you have to use for that trade. So that's very important. 1% risk on broker account, 0.5% risk on funded account. Daily loss limit for broker account. If you lost 4% in a day, then stop trading. Simple as that. If you are trading on your broker account and you have lost 4%, then stop trading and stop trading and take rest. Don't trade for 1 or 2 days. Take rest. That's very important. And if you are trading on a funded account, and then daily loss limit is 2%. If you got 2% loss, take rest, 1 or 2 days of rest, then come back to trading. Okay, the rest is very important to recover your mindset, because when you trade in markets, when you get losses, your mindset will disturb. You are more emotional, you are in a revenge mode. So a 1 or 2 day rest is very important. Now, when I see different histories of different people, they share, they have multiple trades open at a time. Listen, guys, never take more than three trades at a time. I personally trade 1 or 2 trades at a time. I never trade three, four, five trades at a time. Trade 1 or 2 trades at a time. Never take three more than three trades at a time. That's very, very important. Taking big lots and gambling is disaster for you. If you are gambling and you are getting profits, that is a fake confidence. You are getting fake confidence. You are bound to have a disaster in the future. So never take big lots and gambling. It is a disaster for you. Always use risk management, 1% risk per trade and 0.5% risk per trade. Never do the gambling of big lot size using and recovery of account and this, that, all those. No. Stop loss. Now, when I will see different people, then stop loss is 60 pip, 80 pip, 90 pip. That's bullshit. Stop loss should not be more than 50 pip. Ideally, it should be 20 to 30 pip. If a currency pair moves 80 pips, 60 pips a day, or 100 pip, gold moves 150 pip a day, how you can put stop loss on more than 50 pips, like 80 pips? How you will get risk reward, like 1:2? It means gold have to move 200 pips daily to give you the 1:2 risk reward. That's very hard. So I want you to have small stop loss like 20 to 30 pips, like 10 pips. That's very important. In gold, my strategy will help you to trade with 20 to 40 pips stop loss. Mostly you will have 20 to 20 pip stop loss or 30 pip stop loss. I will tell you the strategies which will give you trades on which you have stop loss of 20 pip or 30 pip in gold. In currency pair, you have stop loss of 10 pip or 25 pip. In crude oil, you might be have a bigger stop loss like 50 pip, 40 pip. Okay? So stop loss should be at 20 pip, 30 pip. It should not be 70 pip, 60 pip, 80 pip, 100 pip. No. It should be 20 pip or 30 pip or 15 pip. That is the good stop loss, because whenever trade goes in your favor, 1:2, 1:3, 1:4 conversion will be easy for you. When market moves in your direction, 1:2 risk reward, 1:3 risk reward, 1:4 risk reward will be more easy. If you use big stop losses, then conversion of risk reward will getting disturbed. Trade management, the very important point. Whenever you trade and trade goes in your profit equal to your stop loss, like you have a 20 30 pip stop loss and now trade is going in profit in 30 pip profits. Now stop loss shift to break even. It's optional, but try that stop loss. You should shift to your entry point. That's very important to lock to break even to set the let's be risk free, or if it's optional. But when the trade is moving in 1:2 risk reward, I mean you have a stop loss of 20 pip and trade is now running in 40 pip stop loss, 40 pips target profit. Stop loss is 20 pip and now trade is running in 40 pips profit, then 30% profit take from your position is very important. You have to exit your 30% position and take profit and shift stop loss to break even. That's very important. That's must. Okay, now again market will go up in your profit 1:3, then further take 30% profit taking. Now 1:3 risk reward, then further take 30% profit taking. That's very important. And rest 40% is on your will. 40% you can hold till your objectives, till your ideal target as per your technical analysis, as per your strategy. Hold 40% position, especially if you are within the trading within trend. Hold that till target or till end of the session or end of the day. Hold that position. Okay, and trail your stop loss above to latest low or latest high. That's very important. So trade management is very important. So on my strategies you will follow these things. Trading trading mindset, that is most important 5 lines. These are the one of the most important 5 lines of this lecture. These are the very important 5 lines. I am telling you, I read too many books and I merged all books. I extracted from every book and I end up with these 5 points. And these are the psychological trading mindset points. First point is anything can happen. Market is always the boss. Whatever you are, whoever you are, how good you are in your technical analysis, how good you are in your analysis, how good you are in your trading, you don't know what's going to happen next. Anything can happen in the market. Anything can happen anytime, anywhere, on any instrument. Anything can happen anytime, anywhere in the world, and that will disturb your trade. So you are not sure, anything can happen. So you have to be flexible in your mind, never be fixed like you are going to buy, then it will must go to buy. No, anything can happen. Okay, so your mindset will be very flexible, that whenever you take trade, whenever you are watching market, anything can happen. And when selling will happen and you are getting taking big lots and gambling, no, anything can happen. So never do big lot trading or gambling, because anything can happen, and when anything can happen, that can disturb you. So that's very important. Then market is the ultimate boss. Market knows where it market needs to go. You are the follower of the market, not you are the driver of the market. Second point, you do not need to know what is going to happen in order to make money. Many people think that if they do good analysis, they will make money. That's bullshit. As per my experience, those people who are good analysts are not good traders. Listen very carefully. You don't need to know what is going to happen next in order to make money. Prediction will not give you money. Prediction will not give you money. Prediction will not help you in making money. And you don't need to know what's going to happen next in order to make money. So be relaxed. You don't need to know what's going to happen next in order to make money. You don't need any prediction. You don't need any fancy analysis. Okay, I will tell you my strategies that will help you how you will go on with your trading on that. Now, third point is there is a random distribution of win and losses for any given set of variable that define as whatever strategy you have, whether volume spread analysis, open interest and COD, whatever strategy you have, you will get random distribution of wins and losses. You will take trade, loss will come, profit will come, loss will come, profit will come, loss will come, profit will come. You never know. You just keep on trading that your system. Just keep on trading your strategy, your system, and let the market do what market will do. Random distribution of your wins and losses, let account make that history, wins and losses. Ultimately your edge, your probability will make you profitable. So you never know when you take trade, you never know it will win or loss. You just take trade, take 20 to 30 trades on this strategy. Ultimately the edge, the probability will play and will give you profit. Edge is nothing more than an indication of higher probability of one thing over the. What is edge? Edge is simple, your strategy, your system, on the basis of which you are taking entries of buy and sells. Like we are taking we will take entries on the basis of volume spread analysis, on the basis of open interest, on the basis of COT report. So 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 how we will win? We will win because our strategy have an edge and our probability is higher. So a random distribution of wins and losses will like that 10 wins and 6 losses, 15 wins and 5 losses. So wins will be more, losses will be less, because our chances are high to get the profitable trades. So distribution, random distribution even give us ultimately as a collective profit to us. Okay, now every movement is unique, that is very important. Market, if fails your method or strategy at one time, does not mean it will not work next time. Listen, whenever we follow strategy and whenever we get failure, we throw the strategy, we throw the system, we throw the matter. That's bullshit. Follow your strategy, follow your system religiously, and win and losses will come as random. So every movement is unique. Sometimes you will get profit on good on trades on your strategy, sometimes you will get losses on your strategy. You don't know, every movement is unique. So you have to keep going on, you have to keep going on. Mechanical state, you have to be a mechanical. Okay, in order to be a good trader, you have to be a mechanical. Okay, so build the trust, self-trust necessary to operate in the unlimited environment. Market is an unlimited environment, and we are operating in an unlimited environment, so we should have a self-trust in our strategy, in our system, that our system will ultimately give us profit at the end of month, at the end of 2 months. That's very important. Win or losses will come in a random distribution, but collectively, as a history, as a high probability of our system, we will have a self trust that we will deal with this unlimited environment and we will get profit. Learn to flawlessly execute your trading system. Don't add too many things. Don't complex your system. Don't add too many confluence factors. Don't go for accuracy. Accuracy never exists. Accuracy is 60 to 70%. That's it. If your system is giving accuracy of 60 to 7%, that's the perfect system. So learn to flawlessly execute your system. Never question your system. If your strategy, your system is giving you a buy or sell, take trade. Never think, take trade, let it go. Okay, train your mind in think of in probabilities. Yes, you should think in probabilities, that win and losses will be in random distribution, but wins will be more, losses will be less, because you have an edge, you have a strategy that have more probability of occurrence of winners than losers. Okay, create a strong unshakable belief in your consistency as a trader. You have a strong belief, you have a strong unshakable belief that you are a good trader, you are consistent, and you will follow your rules religiously. Okay, that's very important. Now at the end, what you have to do as a trader, simple is that. What you have to do as a trader, what you have to do, like you will ask yourself, I objectively identify my edges. Like you will follow your strategy, you will follow your system, you will identify your strategy points, you will identify your setups, you will identify your edges, your setups, your strategy. You will first identify it, then you will predefine the risk of every trade, like 1% risk per trade or 0.5% risk per trade. You have to predefine that risk per trade. You do that, then completely accept that risk, that you can you can have loss, you can have profit, you don't know, you just accept the risk and take the trade, let it go. Like trade the trade, take the trade, never think too much, just predefine your risk, identify your strategy, identify your setup, identify your trading point, and then define your risk per trade, like 1% and 0.5%, and let go of the trade, take the trade, accept the risk, let it go, never think too much. Okay, I act on my edges without reservation and hesitation. Never hesitate, never do have any reservation, just play your strategy religiously, mechanically, robotically. Okay, I pay myself as the market makes money available to me. Whenever market goes in profit, 1:2, take 30% profit, exit position, 30% position you have to exit. When market goes in 1:3, take further 30% position in profit. Take profit, get out of 30% position. Remaining 40% position you can hold till the ideal profit target or till the end of the session, or long term hold you can hold. Now I continually monitor my successibility for making errors. You have to watch yourself. Your mind should be in a way that you have to watch yourself. What you are going to, are you doing anything wrong? You have to monitor yourself. Are you doing anything wrong? Are you making any errors? That's very important. You have to monitor, you have to watch yourself, your mindset, whether you are getting away from your plan or whether you are on your strategy. That's very important. Always keep eye on your mindset. and never, and you're making errors. Keep eye on your error making thing. Okay. And last point is, I understand the absolute necessity of these principle of consistent success, and I will not violate them. These all principles are very important, and in order to be a successful trader you have to follow them. If you will not follow them, you are not a good trader. Whatever strategy I will give you, you cannot make profit. You will always make profit if you follow my all these things, okay, that I covered in this lecture. So never violate them, never violate them, never violate these things. These are very, very, very important. I am telling you, if I give you strategies, still you will not make profit. You have to accept my this lecture, you have to follow my this lecture, this mindset, then you will make money. If you are not using my this mindset which I am mentioning you in this lecture, then whatever strategy I will give you, you cannot make money. So try to make your mindset like I am mentioning here, and then move forward to follow my strategy. Now on the next lecture I will give you the strategies, follow and make profits. Thank you.